what side would you be on? More sort of the Kashkari Bullard, we need to cut rates because we're concerned about the future, or CEOs who actually, do business suggesting that things are relatively good right now?
Brian, I think I'm on the CEO side here. I mean, Fed Governor Bullard does bring up good points. The trade war could raise some problems going forward. Also, the inverted yield curve is more ammo for the rate cutters. But there are a couple of Fed governors who have dissented to the two rate cuts that we've had, and they've observed some of the same things that CEOs have pointed out. I mean, retail sales have really been strong. Job growth has been strong. Industrial production, the manufacturing sector, which was something that I think helped to lead us into this rate cut campaign, if you want to call it that. I guess Powell isn't calling it a campaign. But industrial production has gotten off the mat. So I would be in favor of what the CEOs are saying, the two dissenters on the Fed. If I were part of the committee, I would probably be dissenting. I probably would have dissented to two rate cuts, and I'd do that going forward.
But yet, from a stock perspective, I know, Rob, that you believe that consumer discretionary may have gotten a little ahead of itself as a valued group in terms of, there's a difference between the economy and the stock market, as we well know.
Absolutely. When I'm looking at sectors, whether I like them or I don't like them, I really look at what's the valuation. Number one, I look at does the sector have visible earnings growth down the road, and how does it look technically? And I think you kind of hit the nail on the head there, that it's it's consumer discretionary is a little out of kilter in regard to all three of those factors.
But you still like growth over value and international. When you say international, would that be Asia? Would that be Europe? Would that be emerging markets, Rob?
So in answering that question, since the Fed is still in rate cut mode, we would expect the dollar to nudge down here. So that would basically say that the big cap growth multinationals should do well, probably better than smaller cap stocks, which tend to be domestic. So that leads into what you just mentioned about liking growth stocks. The international space, we're with most of our clients, we're not getting into country specific or region specific ETFs. It's more a bet on do we want to, you got to have international exposure. Are we going to overweight it? Are we going to underweight it? And with a falling dollar or a nudging down dollar, falling is probably too strong a word. It makes sense to overweight for a U.S. investor in the international space.
Yeah, and very quickly, financials, they also continue to look good, even with rates at 1.7%. They're not quite getting that yield that maybe some of the financial investors want. You like it?
Yeah, well, yes, and our expectation, obviously we've had this inverted yield curve. It's a big concern, but our thought is that it's going to get steeper. That should help banks, and that should help the financial space.